Welcome back to Alpha Recap, your quick weekend rundown of what moved markets. We're recording after the close on Friday, the last full trading session before the long weekend, and we've got a tape that mixed penny stock fireworks with a big aerospace milestone. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, great to be here. Lots to unpack. What really stands out here is how two very different stories showed up in the same session. Speculative microcap action and a straight-ahead program win for a major defense contractor.
Exactly. Markets closed with that split personality. On one hand, you had massive percentage moves in low-price names. Some surged, some collapsed. And on the other hand, you had a clean, fundamentals-driven win, the Orion capsule splashdown tied to Lockheed Martin's work.
When you step back and look at this, it's a reminder that headline volatility can come from very different sources.
Let's start with the momentum monsters because those were impossible to ignore. Fuse jumped 115% to about $1.83 on roughly 120 million shares. Raya rose about 107% to roughly 95 cents on about 415 million shares. And MAPS doubled to a penny on about 165,000 shares.
Double to a penny. Big headline, tiny math. Right. And the other thing is, those moves were obviously driven more by momentum and participation than by any immediate fundamental re-rating.
Spot on. When you see that sort of volume, especially the 415 million shares on Raya, it usually means concentrated momentum trading, retail flow, sometimes algorithmic activity. That can push prices very far, very fast, and it can reverse just as quickly.
Yeah, that tracks. And the risk there is follow-through. If nobody shows up to buy at higher levels, price discovery can unwind in a hurry.
So a couple practical things to watch: filings over the weekend, any company press releases, and Monday's opening volume. Analysts often look for follow-through volume to validate these rallies.
Short reaction, follow-through matters a lot.
Totally. Now, on the flip side, we saw some brutal one-day drops in names with really thin liquidity. PN fell about 37% to about 19 cents on roughly 907,000 shares. A few names plunged on basically microscopic share counts. One example moved on just a couple hundred shares, which is textbook execution risk.
Those moves hurt. Low volume declines mean wide bid-ask spreads and volatile fills. You can have trouble getting out without moving the price further.
Right. ASPCR dropped about 39% to around 12 cents on only about 233 shares. QSIAW was down about 43% to about 7 cents on roughly 36,000 shares. ABVEW plunged about 56% to about 10 cents on about 14,000 shares. Those are the pictures of liquidity traps and concentration risk.
And to add to that, weekend filings or regulatory notices can create Monday morning gaps. So if you have exposure to penny or microcaps, the weekend is prime time for surprises.
Short reaction. Weekend filings change everything.
What really stood out to me was the macro signal that showed up alongside all that microcap drama. Google Trends registered a sharp jump in searches for the word inflation.
It doubled to about 20,000 searches heading into the weekend, which is a meaningful sentiment signal.
That's right. Search activity like that can act as an early barometer of public concern. Higher inflation attention tends to push money toward defensive sectors and can make rate-sensitive assets more volatile.
Exactly. In plain terms, when people get worried about inflation, investors often reprice long-duration assets, some growth stocks in particular, because the discount rate changes. So the inflation spike is a potential cross-asset volatility driver next week.
When you step back and look at this, the combination of macro anxiety and speculative microcap flows is a recipe for headline volatility.
Short reaction. Big combo risk.
Now let's pivot. We should spend some time on the clean, fundamentals-driven story here. Lockheed Martin's work on the Orion capsule.
Yeah, this was the grounding story amid the noise. The Orion capsule completed a successful splashdown after the Artemis II mission, wrapping up a crewed deep space flight of about 694,000 miles. That's the first such crewed mission in more than 50 years, and it materially de-risks the program.
Which is huge. A validated spacecraft reduces program-level uncertainty. Analysts are likely to treat this as a positive data point for revenue visibility across Lockheed Martin and its supply chain.
Right, and the way to think about it is simple. Speculative microcap moves are noise-driven and fragile, while this is news-driven and confirms engineering and program milestones. That usually gives analysts a cleaner line of sight on contract timing and risk.
There's also a morale and political angle. Successful missions can smooth follow-on timelines and make it easier for contractors to negotiate supplier work or future awards. Not immediate stock advice, just context for why the market cared.
Exactly. Objective context only. Analysts note that confirming hardware performance lowers uncertainty, which can influence how defense stocks are modeled for revenue in coming quarters.
Right. And that contrasts with the microcap tempo. One is fundamentals, one is sentiment. Both move prices, but for very different reasons.
Let's talk patterns and what the flows revealed on Friday. First, retail and momentum still dominated the low price segment. Multiple double-digit and even triple-digit percentage movers in the same session is a persistent theme this quarter.
Yeah, and volume divergence mattered. Raya and Fuse moved on huge volume, which suggests broader participation. The big losers moved on thin liquidity, pointing to idiosyncratic sell pressure or single trades causing large percent moves.
Which means the risk profile is different depending on the move. High volume rallies can still reverse, but low volume drops are especially dangerous for anyone trying to exit positions quickly.
One more note. The inflation surge spike puts macro noise back on the table. Traders will likely be watching upcoming inflation prints and central bank commentary for catalysts next week.
That includes how bond markets react and whether rate-sensitive sectors see sharper moves. Options and short interest on the biggest movers will also be worth watching as a gauge of positioning stress.
Rapid-fire recap of the biggest movers, just to lock numbers in our heads. Fuse up about 115% to around $1.83 on roughly 120 million shares. Raya up about 107% to about 95 cents on about 415 million shares. MAPS doubled to about 1 cent on roughly 165,000 shares.
Also worth noting, XE was up about 23% to about $1.22 on roughly 137 million shares. On the downside, PN down about 37% to about 19 cents on about 907,000 shares. ASPCR down about 39% to about 12 cents on around 233 shares. QSIAW down about 43% to about 7 cents on about 36,000 shares. ABVEW down about 56% to about 10 cents on roughly 14,000 shares.
And we mentioned inflation searches doubled to about 20,000 on Google Trends, while Lockheed Martin's Orion splashdown capped the week with a successful mission.
Okay, quick listener-friendly takeaway checklist for Monday and next week. 1. Watch follow-through volume and opening prints on Monday, April 13th. 2. Check weekend company filings, 8Ks, and any regulatory notices for the micro-cap movers. 3. Monitor inflation data and central bank comments for broader market implications. 4. Track Lockheed Martin updates and supplier commentary for program flow-through in aerospace and defense. 5. Watch options and short interest for signals of positioning stress.
Short reaction, that's your weekend to-do list.
So, To sum up, Friday's session reminded us that the market can bifurcate. On one side, speculation-driven microcap fireworks. On the other, concrete, fundamentals positive milestones like Orion's successful splashdown. Both are valid inputs to volatility, but they behave very differently.
Yeah, absolutely. Momentum and retail flows can create big, fast moves that often reverse quickly, while news-driven program wins tend to reduce uncertainty and support clearer analyst models.
Final quick takeaways: expect potential gap risk Monday from weekend filings, keep an eye on inflation prints and Fed commentary, and treat tiny cap swings as high risk, high noise activity rather than reliable signals.
And remember, this is informational only. Analysts note that momentum in low-priced securities often reverses quickly, and macro developments can materially affect direction, not investment advice.
If you want more detail on any of the names we discussed or the data points, head to stockalpha.ai and ask us directly through the Q&A feature. We'll answer live and follow up with more color.
For more market analysis and insights, visit stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live.
Thanks for listening. Have a great long weekend, and we'll see you next week when markets reopen.